Good afternoon. Welcome to JSE Stock Picks. We are live on YouTube, and we have a wonderful, we call you our studio audience today, to join in this fantastic stock picks. My name is Sam Okorosi. I look after origination and deals at the JSE, and I've got a panel of experts here who are going to tell us something interesting about themselves before they start to share with you some of the stocks that they're really excited about, that you can then go out and call up your stockbroker and start to invest in some of them. Of course, this is not financial advice today. This is just for educational purposes, but we're really excited to have you. First, I have Petri, who is the founder at Harinya Capital Advisors, to my left. Next to him is Bright, who's a portfolio manager and analyst at Vestac Asset Management. Gary is number 3, who's director and portfolio manager at Rand Swiss, and Chantal is head of investment research and content at FNB Wealth and Investments. Petri, let's start with you. Something interesting that maybe the audience doesn't know about you before we get into your fantastic stock picks?
I mean, how personal are we going to go here?
Oh, we can get very personal. It's an intimate room.
I have parrots as pets.
Wow.
And I like rock climbing.
Okay, okay. Do you teach your parrots to say interesting things?
They help me with stock picks.
Oh, they choose us. Okay, all right. So, Petri, why don't you tell us about your 3 picks that your parrots have decided that we should be putting money into?
Okay, so the first one is the 3rd time I'm talking about it. So if you bought it the first time and you're still buying it, thank you, is Sasol. I think it's in a position where it's become went from one of the most loved to one of the most hated shares in town.
Yeah.
And I think that there still is an outsized opportunity in the stock. After that is one that I share with Chantal, which is capital appreciation. She's going to know way more about it than I am. So
sure.
Just putting that out there. She can have my 2 minutes. And then the last one is the Spar Group, which I think some of you guys will have seen some corporate action around in the last couple of days, a bit of news flow around that. And I think a lesson in how to pull a stop loss, with their Polish business that they're selling. So those are the 3 that I'll be looking at.
Okay, so tell us a little bit more about capital appreciation or Spar or Sasol, whichever one you want to start with. Why do you like it? Where are the opportunities? Where's that stock going?
All right, I'll start with capital appreciation, and then hopefully Chantal can expand on it a little. I think she's a lot stronger with the fundamentals than I am. But essentially, it is a fintech business, right? So they do a lot of the speed points that you pay at, multiple banks linked to one device, multiple payment methods on one device, whether it's with the Apple Pay or with your smartwatch or with your card or whatever the case is. This is a technology that they, in some cases they import and distribute, in other cases they develop and market.
Fantastic.
They've got essentially deals with the major banks in South Africa, and they provide these payment services for merchants, for corporates, for banks, and also they've got a group of companies as well, but some of it is also sort of online based. So one of their products, for example, is like a lay-by type thing, and you would have seen quite a few more websites are coming up with, you can buy this now and pay it off in 3 installments.
Yes, buy now, pay later.
Buy now, pay later, right? So this is something that they're kind of developing and bringing into the South African market and bringing out to retailers, particularly in the online space. And it's interesting to see how the uptake of that product is quite strong. And the way that they structure it is they're not actually giving someone credit. It's like a structured savings account kind of thing. So that fintech space, I think, is a very exciting space because primarily what their goal is, and I think what's going to work really well for them, is that if you look at the context of the African continent, more and more people are adopting phones. More and more people are becoming phone-centric or gadget-centric and moving towards digital currency. And I know that when you think digital currency, you think Bitcoin, right? But digital currency is also making an EFT to someone, making a bank payment. Right? That's the original digital currency. We moved away from banknotes and things a long time ago. So the adaptation or the adopting of digital currency all throughout the continent creates a huge opportunity for payment infrastructure where you can use digital means of payment like cards or phones or smart devices. And this is very much where they're concentrated, and I think is a huge growth opportunity.
Okay. And then Spar or Sasol, both of those have had some challenges.
I'll go with Spar first. So the Spar Group, I think, has taught us, for those of us who are traders as well, the ability to take a stop loss is not always easy, right? So what they did essentially recently in Poland is they, had the Spar Group in Poland. It was like 200 stores.
Yes.
They went in there very aggressively and, full of hope and bushy tails and bright eyes, and it didn't work out so well for them. And essentially this had become sort of a loss leader. So if you look at last year's results, for example, revenue was up 17% or something like that, and I think profit margins were up something like 40%. Almost 47%. I'm not 100% sure. Gary's brought notes. I didn't. So anyway, if you take that in the context that they were paying this bill, that they were constantly losing money in Poland, and you still see all this revenue growth, now that they've gotten rid of Poland, I think the sky's the limit, right? I think it's going to have a huge impact. So it's interesting to see with the unwinding of this deal, it's going to cost them 2.7 billion rand, sort of as a minimum, 3.5 as a max, as they have to get that Polish business down to a book value of 0, so the people buying it don't even pay for it. They literally just take it from them for 0 money. And they've got to fund like a year's worth of capital losses so that the Polish business can take it over. It's like a family-owned business. And that is a masterclass, I think, in how to admit you're wrong
and get out.
Pay the toll and get out, right? And if you get rid of that loss-making loss center, I think that earnings from the Spar Group is going to really rocket. They've basically eaten Pick and Pay's lunch. And from a profitability perspective, once you get rid of the Polish business, it's in a very good space, I think.
Very good.
Right,
and then Sasol?
Lastly, Sasol, So Sasol, I can feel the egg on my face because I've said Sasol a few times now, and I'll say it again. So I think the most recent thing to talk about there is the change in the way that they're going to be treating with emissions or treating emissions, particularly at the Secunda plant. I think that is one of the most concentrated points of pollution on Earth, actually. Right? It's bad. But it's a very complicated situation because at the same time, it's also an enormously big employer. And the downstream sort of knock-on effect of everybody that in some way, shape or form is influenced by Sasol or employed indirectly by a Sasol operation is absolutely massive. So it's one of those kind of companies, I don't want to say it's too big to fail, but we really as a country can't afford for them to go under, right? So we have to find a way to work with them. And now a new CEO has come in and said, look, this 30% emission reduction by 2030 is more going to be between a range of 25 to 35.
Right.
You can imagine the shareholder, the Greenpeace activist guys are going to have a field day with this. But at the end of the day, I think what we have is a leader that's been put in position that really has a firm understanding of, look, we've set some targets we might not be able to make. We have to really do this, be realistic about how we're going to approach this. And he's managing our expectations, I think, relatively well. And then just from a profitability perspective also, they went into their US operations and, took a project that was way over budget, way behind schedule, essentially decided to tuck their tail between their legs and run from that as well. And in recent times, they've been under a little bit of pressure because the oil prices come down. But our macro view is that energy prices will continue to rise. Commodity prices will continue to rise, and I think that Sasol is well positioned for that. And it's at that point where it's actually so low at this point that the valuation, we think at least, is so cheap that you have to buy it.
So just a reminder to our audience on YouTube that we are taking questions. So put your questions in the chat. I will get them here via WhatsApp. Let's take your questions on any of these stocks. Thank you, Petri, for your 3 stocks. Bright, something interesting about yourself that maybe the audience doesn't know before you jump into your stocks. Maybe you've got some parrots giving you stock tips as well?
I don't have parrots. I actually have dogs.
Oh, you have dogs?
So I have 2 dogs, but I don't think that's the most fun thing about me. Excuse me. I've joined cycling again after a hiatus of over 10 years. So I'm back, mountain biking and gravel racing. So my power numbers are looking strong.
Great.
So that's what's interesting about me. And I think in this room, I think I can beat anyone here in this room with power numbers.
Oh, okay.
Here's the proof.
You've heard the challenge.
If you want to put money down,
Hook
call me.
up Bright for a race challenge. Yeah. So Bright, you are going with 3 stocks. What are your 3 stocks?
Why don't you do 1-1-1?
Yeah, maybe let's do that.
Yeah,
I was thinking we'll do that. We'll do that.
I hate sounding monotonous.
Which one do you want to go for first?
I'll go first. Since I have clients here in this room, see everyone. We'll start with Bidcorp.
Okay.
Which is a food services and supply chain company that focuses mostly on food. I mean, it's in the name.
Yeah.
Yeah, and they operate in over 35 countries. I mean, from South America, the Americas, we have Africa, which is a big continent for them.
Yeah.
We've got Australia, Australasia, we have Europe as well. So you are diversified, not just, geographically, but when it comes to currencies as well.
Yes.
Because there's a big risk if you're a company and you operate in one currency and in one country, which is most of some listed companies do here in South Africa, which some of them are showing a lot of potential. I'll get to them. But currently we're talking about Bidcorp. And they operate a very decentralized model, meaning they let the management of the different geographies run the businesses the way they want and see fit, as long as, it's a profitable business and it's growing, and obviously I'm sure they've got targets.
Yeah.
Yeah, as if they want to be part of the subsidiary or keep their jobs. So this is a very good business, and with where they stand currently on the JSE, on the returns perspective, if you look at the last 3 years returns, they've done exceptionally well.
Yeah.
I thought to myself, maybe they'll be very expensive. They'll be north of 20 in terms of price to earnings ratio, but currently they've got a forward PE of just above 16 and a dividend yield of 3%, which is very impressive for a quality business like Bidcorp. The question I get a lot about Bidcorp, because people understand food, but they don't understand who their clients are.
Right.
So, I mean, you could think hotels, schools.
Right.
Anywhere where there's a canteen, these guys are there. They're providing fresh produce. They frozen produce, ambient produce, anything that you need in terms of food.
Yep. Can I ask a question?
Yep.
What is ambient produce?
Warm.
Oh.
So temperature controlled.
Gotcha.
Yes.
Okay.
Yeah.
At the back.
I can try to shout louder.
All right. We can't be too loud, but we'll do the best we can.
Okay.
We'll do the best we can. We don't want to make too much noise for the rooms next door. But those at the back, maybe you want to come in a bit closer, have a seat on the floor. You're very welcome. You're very welcome.
So yes, that's my first stock pick, Bidcorp, which is also a Vestact, recommended, company.
Yeah.
Yep.
So we actually have a question from the YouTubes.
Okay, if you're on YouTube, you have to drop those fire emojis, right? Give me the eggplant and make it drop rain. So I know you're there.
This is Bright's trick every time. Every time. So Prince Mohale, for any of you, because this is not on your stock pick, is what is your view on We Buy Cars and generally the pre-owned car market? So,
okay,
So Bright has a view.
I'm gonna come into that when I talk about one of my stock picks.
Okay.
Yeah.
All right, but
it's in the space.
Okay. Good,
is it
good,
in
good.
there?
But Chantal, no. He wanted to touch on it. It's not his stock pick, but you can go for it now.
It just excites me, We Buy Cars.
Okay.
So I think that the growth runway is quite substantial. The used car vehicle market is a lot less cyclical than the new car vehicle market.
Right.
And the used vehicle park has actually outstripped the growth of the new vehicle park for, I think, something like 15 years.
Wow.
It's a very fragmented space, so there are a lot of used motor vehicle dealers. We Buy Cars just happens to have the biggest market share, which is still about 12%. They're aiming to push that beyond 20% over the next few years, and I think that they can easily do that, given what we've seen over the last few years and the plans that they've put forward going into, I think, a 2030 kind of view. So, yeah, I mean, I think it's a great stock. Is it cheap at the moment? No.
Okay.
But if you take a very long-term view, and it's something that you're willing to hold for a very long time and not watch closely every day, I don't see anything wrong with even buying it at these levels.
Great.
Can I ask a question?
Yep.
Just a follow-up question. So, we're of the view that things in South Africa get a bit better because the lights have been on for 6 months. Right? It's a good start.
It's a great start.
And I think that we'll find that once we have a stable sort of political environment and a stable electricity environment, that hey, economic growth happens. Right? Surprise, surprise. What happens when interest rates come down, economic growth starts to happen a little bit faster than what it is now? Because we will follow the US into interest rate cuts. They will start cutting, relatively soon. Life gets a bit easier for us. Aren't motor spares and second-hand vehicles then under a bit of pressure because people would rather buy a new car?
I think it depends on what market you're looking at. So in the South African context, we don't have a lot of drivers relative to a country like the US or Australia, for example. A lot of people are in income brackets that won't put them in a position to buy a new car, but increased economic growth
is going to
could
put people
actually
into
put
the
them
bracket
into
to buy
the
a
used car
second-hand car.
market.
Gotcha.
Yeah, that's my thinking about it.
That's okay.
Yeah.
Great. I am watching the time. We have to finish at 53 past. So we're on the clock here. Gary, something interesting about yourself, and then your first stock.
Okay, I'll try and be loud, because who cares about the neighbors? So I think, so I don't know if there's anything interesting I can tell you about myself. Maybe I met Petri, I think in 2010. And I'd been following this guy, Trader Petri, on Twitter for years. I was such a fan. And I couldn't believe I finally met him.
And now you're sharing a stage with her. Starstruck. I can see that.
There was this guy, and I was like, Trader, and I think I might have even said to him, "Oh, you're like that Trader Petri guy." And he was like, "Yes." I was pretty impressed with myself when I met him.
Gary started his business before mine, and it's been my goal to catch up to him ever since.
Been trying to get Petri to join us for years. But yeah, my stock picks, if we're going 1-1-1, I've kind of picked 3 stocks, kind of to represent our portfolio view, because I'm a portfolio manager rather than an analyst. So our local portfolios typically sit within kind of retirement space, because we want obviously the tax advantages that provides. And we really want to access things on the JSE that you just can't access in the global space, because otherwise, why are you investing locally?
Yeah.
So essentially, I'm looking at Stadia, which is, obviously we've got Anthony Clark, this is one of his picks.
Yeah.
That is private education, tertiary education, really like it for that kind of niche SA Inc. exposure that you just can't get elsewhere.
Great.
Then we've got Glencore is my other pick, which is, you look at the South African exchange, and we've got some of the most exciting commodity counters in the world. Glencore is definitely up there and something I believe you should have. And the final stock pick is Richemont, also great rand hedge, something that you can access locally but gives you massive international exposure. So I've kind of tried to represent the thesis of our portfolios within our 3 stock picks.
Okay.
But I'll start maybe with Stadio.
Sure.
Stadio, if you look at it, compared to Cure and Advocate, which are the big competitors, it's the smaller guy. So it's about a 5 billion market cap at the moment. Really focused on the tertiary education space. Now, I was interested, they're at about 46,000 learners, but 86% of that, so around 40,000 learners are online. So the kind of impact that we've seen in Cure and Advotech on semigration and immigration actually reducing student numbers doesn't affect Stadio in the same way.
Right.
So Cure is losing about 3% of learners to semigration and immigration at the moment.
Sure.
Stadio avoids that entirely, because once you start a course with them, it's online and you can develop it. Also, obviously, building new campuses. They've got a big campus out in Durbanville they're breaking ground at the kind of second half of this year, but should come online, add another 1,000 learners, and from all indications, chatting to the CEO, their PLS stated that they wanted to be by 2026 at around 56,000 learners.
Yeah.
They've got 10,000 to go in the next kind of year and a half. They are way ahead of schedule at this stage. So looking like a really good growth story where the private sector has come in. We all know the trouble that the public sector is having in terms of tertiary education. We know the kind of well-publicized problems that UNISA has faced.
Yeah.
And Stadio is really filling a need, and it's something that the private sector is doing so well compared to public services. So go Stadio, and not particularly expensive if you consider it compared to the others, and you consider the growth rate that they're achieving.
Great. Thank you. Over to you, Chantal. Something interesting,
Interesting. Okay. I haven't slept in 5.5 years. So my kids are 5 and 2. The second interesting thing is I really like to lift very heavy weights.
Okay.
And as a result, I will take up your challenge on the quad game. But yeah, I mean, my picks are, as usual, I love the SA small and mid-cap space. So I have two kind of small mid-cap stocks. As Petri mentioned, capital appreciation is also a stock that I really like and that I've picked for today's event. City Lodge is the second one. And then the Amazon exchange traded note. This one specifically is the compo, which means that you do get exchange rate exposure as well. I'll firstly explain why I'm taking the compo option. So even though we expect the rand to strengthen over the coming months, we would expect it to continue weakening over the very long term. So if you are buying for the long term, you would want that exposure to a depreciating rand when you're buying an offshore asset. The reason I'm buying an Amazon ETN and not Amazon directly is because Amazon directly is a company that is actually difficult to buy when you don't have a lot of capital because of the actual share price being quite high in dollar terms. But with the ETN, you can actually access it with a much smaller capital outlay. So I'll perhaps dive into Amazon first because I've been talking about it now for about 2 minutes as well. So Amazon is one of the Magnificent 7 stocks listed on the New York Stock Exchange. It's part of the S&P 500. It is a massive company, and it has blown up over the last few years because of this AI trend and it being part of the Magnificent 7. But more recently, we've actually seen a really nice derating of the Magnificent 7. And Amazon, I think, is one of the companies in that stable that is least exposed to the AI story becoming bigger and bigger and bigger. Because it is quite well diversified, it has a big growing cloud business, which we really like, and they happen to be really, really solid in the e-commerce space. So that adds an element of diversification. From a valuation perspective, we're looking at a forward PE of about 27 times. And that sounds big in the context of the stocks that are trading on the JSE, particularly the small and mid-cap stocks that I really like. But if you consider that that is 2 standard deviations below, which means it's quite a chunk below its average valuation over time.
Right.
And the premium at which it's traded at relative to e-commerce peers has narrowed from 80% to 40%, as well as the growth runway that we expect from the company being about 20 to 25% growth over the next 3 years in earnings. The stock doesn't look expensive. And I think that it's just a really novel way to enter the stock via the JSE with a lower capital outlay than having to take that money directly offshore.
Great. We've got a fire round of YouTube comments, questions. I'll give you guys the questions, then you guys can decide which one you want to take. So somebody wants to know about the prospects of Pan-African resources. That's Mfundo Qiniwe on YouTube. Jack's Cab wants to know thoughts on Growth Point. Technically, they're breaking out with less costs for diesel, power, load shedding, etc. Reduced interest rates. What do we think about that? Kaya Mtsweni says, penny stocks on the JSE, how available are they? Maybe, Chantal, you want to take that in terms of just small caps. And then Tobani Steve Mabuza says, I would like to ask the view on Mr. Price and Robex. So anyone want to take any of those? Chantal, go for it.
Can I just mention Mr. Price and Robex were my picks last year, along with my favorite Master Drilling that has done absolutely nothing in the last year. But Mr. Price and Robex has done very well over the last year. It's not because I'm an oracle. Things happened in May that I didn't see coming, and in June, things calmed down in the South African market to a level that none of us actually foresaw. And both these stocks have benefited from the excitement around GNU.
Yes.
So both stocks don't look particularly inexpensive at the moment. But again, if you're taking a long-term view, these are high-quality companies in very interesting sectors, Robex being in construction and Mr. Price being in discretionary retail, with really nice expected growth tailwinds,
Yeah.
both cyclically and structurally in South Africa, I'd still be a happy holder, and I'd even nibble into any sort of weakness.
Okay.
That's mine.
And nibbling into penny stocks?
Nibbling and always. So it's quite difficult at times to get into some of these smaller and mid-cap stocks on the JSE. So my advice is always to take a very long-term view when you are investing in this sector. You cannot trade these stocks short-term.
Yeah.
It's going to be volatile. You can lose money. We can lose a lot of money very quickly when you're trying to put in an order in the market and you're putting it in at market. So just be very careful and take a very long-term view. But most of them are accessible, particularly if you're willing to keep the order open for a few days, maybe months, for some of them.
Who wants to take Growth Point? Who wants to take Pan-African Resources?
I'll take Growth Point. Yeah, I remember, speaking of penny stocks, I remember you were sitting on a trading desk years ago, and it was a Z04 stock, so it was a very illiquid stock. It was in closing auction, and someone came in and put in a market order for 2,000 stocks with no upper limit, and then suddenly our traders spotted it and were like, okay, we'll take that out at 100 Rand, and it was I think a 1 Rand stock. I mean,
Jeepers.
It was absolutely terrible. So take Chantal's advice. Like, there are professionals out there. If you don't understand how to place orders on very illiquid stocks, be careful. Use limit orders. Be very careful. But on Growth Point, we like Growth Point. It's sitting in our local portfolio at the moment. I think Petri was talking about lower interest rates coming through. We've already, I think, seen the optimism of markets are always forward-looking. Markets are a predictor of economic activity. And Growth Point has been fairly subdued over the last 5 years. So Growth Point is an addition to our portfolio. One of the other stock picks. I was at Mr. Price last year. It's been great. Yeah. One of our other stock picks was Storage, because we typically look at the speciality REITs as a good option.
Yeah.
Storage has performed very well in its sector, and Growth Point has been a big laggard over the last 5 years. Okay. Now, part of that is the office component of Growth Point, but I think we're up 30% year to date on Growth Point, and it's as this optimism kind of feeds in. Part of it is the GNU, but part of it is that with lower interest rates, property REITs like this become a comparable product. Suddenly you can't go and stick your money in the bank and get any sort of yield, so you start hunting around, where can I get this? You end up in the property sector. And longer term South African property, we've actually got a negative tilt from a strategic basis, but on a tactical basis, short term, we're very, very constructive. So definitely like Growth Point at this stage. The only concern in their portfolio really is the office, which is going through a structural change, but the rest, retail, industrial, all looking good.
Okay. Pan-African? Anyone?
Petri.
Yeah, sure.
Petri will take Pan-African.
Pan-African. I just want to say hi to Jack's Cab. I see you. Sorry. Jack's Cab is a friend of mine, actually. I'm sure you know him as well, actually. Anyway, so Pan-African is a company that we are quite a fan of. They do a lot of reprocessing of already processed materials, which is very high margin, very low input stuff. So I don't want to go into, I don't have too many details to go into, other than, essentially, if you look at a company like Jubilee, for example, which did super well at one point and has really fallen back a huge amount for some reason. I'm not really too sure why. But they're in a similar type of business where they're taking what used to be mine dumps, reprocessing that material, and then getting precious metals out. So that means they've got really very, very low input cost because they don't have to do a huge amount of mining. And they have to, they can get similar yield than what a new mine would for, a third about of the all-in sustaining cost. So from a longer-term perspective, I think it's going to be a very, very profitable business. They're still, I want to say overlooked, I think, mostly by the market. And in terms of the size of their production, I mean, they're not an Anglo Gold. They're not making a huge amount of precious metals on a monthly basis, but they're doing pretty well. And I think it's a good company if you're willing to wait 5 or 10 years for it. I think it's a great stock to buy.
Great. Right, let's go back to your number 2 spot. Maybe you want to take CMH, because I think that links to the question around We Buy Cars.
Of course. But I wanted to touch a bit about small caps,
Yep.
Not small caps. What do you call penny stocks?
Penny stocks, small caps.
So back in the days when I got into investing, it was 2009, 2010.
Yeah.
There was a very, very important website, www.smallcaps.co.za. A friend of mine called Keith McCacklin actually ran the website. So that's where I, sort of learned how to analyze businesses, read his research, and look at these small businesses and the potential. But the big issue, and what I didn't know at that time, is because I was coming out of high school, straight to university, there was a financial crisis apparently that everyone felt, and everything on the JSE was extremely cheap. So every stock I bought, I was basically set on a total path to failure because everything I bought was actually going up. And I thought I was very smart. So I was like, I'm going to follow this guy. I'm going to buy all these companies on this list. And I learned a very expensive lesson to say, yes, the research might be good. Everything might sound amazing, but you still need to do your own research.
Yeah.
And you still need to actually stick to quality businesses.
Yeah.
Yeah, so that's the lesson I learned from that era. I think everything went up all the way to 2014. Then, things started leveling out, and we saw the likes of Ellie's actually tanking.
Yeah.
It was pretty painful because I held almost every good small cap.
Can I add one thing to your story? So I think something to remember when looking at the penny stocks or the smaller caps is liquidity, right?
Yes.
So if you are a trader, like a day trader, Gary spent a lot of time at a desk, you know that you need volume, right? You need to trade the liquid shares. If you want to take 10,000 first rounds, you can buy and sell them without much slippage, much price change, right? But try and do that with Santova.
So what makes
struggle.
What makes a company liquid? The free float.
Yeah.
So the amount of tradable shares
Yeah.
per day, that's one big thing. And obviously the size of the business itself, the market capitalization.
Yeah, the average daily volume traded and or the value of shares trading hands every day. If it's doing 100,000 Rand a day,
It's pointless having a big
you're going to
business
really
that
struggle
doesn't
selling
trade a
that
lot.
stock. Yeah. So that's, I think, what a lot of people learn is they buy great stocks, they go up a huge amount, and then you try to sell
Still
them, and
struggled.
And then
you're
you
the
can't sell
only
them.
guy. There's no one
Yeah.
trying to buy the stock, and you
Yeah.
got to push it down 30% to get out.
Oh, yeah, so my new favorite company is CMH Combined Motor Holdings.
Okay.
It's a well-run business that operates in the motor vehicle sector. So they specialize in both new motor vehicles from the Toyotas, Fords, and the likes, and used, since you like used so much. So they're part of that, fragmented market she mentioned earlier.
Yeah.
This company currently trades, at a forward PE of like 4. So if this company traded on the London Stock Exchange, it would have been taken over by Thoma Bravo, any private equity company, ages ago, because it pays a dividend of around, this is a historic dividend of around 12%, I think forward of 11%. In the past 3 weeks, they're up 22%. So they're part of the GNU stocks, that are catching a bid alongside We Buy Cars, Mr. Price, and a lot of other interesting companies. And I think this is a well-run business that's not only operating, buying and selling cars. There's obviously after sales, there's servicing, and most importantly, the big profitable side of the business is the finance.
Right.
Because if you get someone today who has absolutely no clue how to buy a car, say, hey, my friend, I can help you. When you buy a car,
It's a trap.
there's financing involved, but obviously you have to watch a YouTube video too about how motor vehicle financing works. So yes, eventually, obviously they are the preferred financier for their cars.
Yeah.
So it makes doing business really seamless for the individual looking to buy the car, the vehicle, and obviously. There are side businesses that are, from time to time that ebb and flow and sometimes do exceptionally well, like the fleet business and car rental business, which she's going to be using. Called First One.
Yes.
It's the best one in PE.
That's
what
the
I
one.
used.
I've already booked my Nissan Navara, Almira, not a Navara. I don't have money for that. My Almira with a boot.
Exactly. So I got a Suzuki Swift when I went there. So yeah, I like the business, and I think it's very cheap and it's overlooked. And I still think that the opportunity for a catalyst, something from, the left side.
Right.
But, with upside. So this is a catalyst to the upside, not the downside. They're still there, and maybe someone is buying the shares. Someone knows something we don't know, or maybe it's just everyone getting excited about the JSE again, especially offshore investors. This is a very good business, high ROE, quality business, quality management. I like it.
We definitely are seeing more interest from offshore buyers on the whole JSE, so that's great to see. YouTube guys, you guys are on fire. So many questions, so many comments. I don't know if we'll get to all of them. Gary, your next stock pick.
I think everyone's going to have a comment on penny stocks and trading before they give their stock pick. So Petri makes an interesting point that traders should be focused on high volume stocks, but I'd sort of qualify that a little bit as well. It depends on your trading strategy. One of the beauties of small caps and the reason that they're so interesting to go and invest in is that there's a lack of price discovery. Big funds typically don't invest in them because it's outside of mandate. But without price discovery, that's where opportunities are created. So yes, you can't go in and out. I mean, I remember getting an order for 10 million rands worth of Meta and getting told by the PM, please get me out in like 3 days. I was like, buddy, this is going to take a month. So yes, absolutely, from an institutional point of view, it's different. But as a private client, you have the volume to get in and out of these, and quite often, as more interest comes into the stocks and the price becomes more accurate, that's where you see the uplift in value. At the same time, in a very illiquid stock, you can go and drop a sell order in there, 10-15% away from market, and if you're patient and you just wait, you can earn the premium of the illiquidity at least. So different trading strategy, but definitely, I would say don't shy away from penny stocks just because there is a lack of liquidity. You just understand the risks to it, but also understand the benefits. Okay, quickly to my next topic, which is Richemont. So Richemont, obviously a big dual listed, fantastic, roots in South Africa, through Johan Rupert. But looking at it, trading on the Swiss exchange just under 120 francs. We've got a target of around 150 francs. So it's about a 30% boost that you could potentially see in it. We're in the company of some of the major institutions and banks as well, also with similar price targets. So I do think it's undervalued. At the same time, obviously a rand hedge. If we do see the depreciation that Chantal is talking about over the next couple of years, that's just going to add to the return in rand terms. Looking at it, very unique business. If you don't know Richemont, luxury goods retailer, it structures itself through various maisons. Which houses, which are typically jewelry and watches, other things. They do have kind of the softer luxury goods like in leather and apparel. It's dragging a little bit of the business, but it's a much smaller component. They typically operate in hard luxury, which is kind of your gold and silver, things that require fine craftsmanship. Overall, very fantastic business in terms of its moat. So when you look at something like this, it's got a strong brand. A moat is something that you want when you're investing because its business can't be replicated. Very different to my next stock pick, which has no moat whatsoever. But looking at this one, some of these brands have a 100-year history. You can't duplicate that. That helps you to generate economic profit. The only kind of drag and risk around the business is the Yux Netta Porter, which is up for sale. But again, it's already been discontinued in the operations, and given current prices, I think worth adding to the portfolio. Yeah,
my wife is a big fan of their products. I'm trying to get her to buy the shares instead of the products, but good luck to me.
What do you mean shares?
Chantal, go for it.
Yeah, so I'll chat about City Lodge. I'll end off with just final thoughts on capital appreciation because Petri's already spoken about it. But City Lodge is such an interesting company in that it is a very different, it's got a very different outlook relative to what it was like prior to COVID. Essentially, it's the same business. It's hotels, it's Courtyard, it's Town Lodge, it's Row Lodge, it's City Lodge. But where there used to be kind of a mid-level price, business travel / one night before you have to take your big flight next to OR Tambo focused, it is now an actual destination to go to. So if you want to do yourselves a favor, go and look at the investor presentation that they put out with their results and go and look at the refurbished hotels that they've put pictures of in that presentation. It is beautiful. They've added to their food and beverage offering. So now you're actually eating and you're eating properly at one of those City Lodge hotels. And we think that there is still loads of growth potential in the domestic travel sector in South Africa, especially as economic growth picks up. And international travel still hasn't actually recovered to pre-COVID levels. And I think South Africa as a destination is absolutely fantastic, and City Lodge will continue to benefit from that. Added to this, during the COVID-19 period, they had to take a lot of costs out of the system because they were actually trying to keep that business afloat. So it's a much more efficient business now. There's a lot more operating leverage in that business now. And City Lodge is one of those mid-caps that trades on like a 6 forward PE by our calculations. We have a target price of about R5.50 on it. So that gives you about 25 to 30% upside depending on where the share price is trading today. I think it's very well managed and one that you can also think about for the long term. Perhaps not something to trade given the way that it trades.
Good, good. Bright, your last pick?
Yeah, so I'm going to throw back to a very great quality business that is very inelastic.
Yeah.
That Gary touched on when he spoke about Stadio. This is Advitech. I think it's the second time I'm talking about it here on this particular platform. If you bought it straight out of COVID when we first had this show, you'll be laughing to the bank currently. And I'm still very bullish on the company today. I mean, it operates in 3 different countries. This is Kenya, where they've got Crawford schools there. You've got Botswana and Gaborone. You have here in South Africa where they're basically well entrenched here and very diversified from pre-primary all the way to university, whether you're into arts or, boring old ass, type
Finance.
Finance, lawyers, and anthropologists. I don't know. I think I just offended everyone in the room here. But anyways, this is a very interesting business, which we like a lot. And we still think it's relatively cheap compared to, the type of quality you're getting when you buy this business. The management is also very strong in running the business, and they've turned this business around quite nicely from post-COVID. You're looking at this business today, you're still getting it at below, again, the S&P 500's average of 21 PE. This you're getting at around 15 as well, which is pretty cheap for a South African company. You're also getting, I think, 2.5% dividend yield, forward dividend yield, which is good. Dividend Papi approves of this one. So I like, schooling. I like the strong brands. I like the diversification of the brands because Caro had a bit of a brand situation a couple of times, and I think a company like Advitech is insulated from that because that brand that actually might have a problem could be, isolated and insulated outside of the business as compared to something that's, a one brand show. Yeah. So I like, these strong brands. Some of them go all the way from the start of 1971, not as old as Richmond's brands, but there is sort of legacy there in these like Trinity House and Crawford College and all of those good businesses. And most recently, people like to take their kids into private universities, and Varsity College and Monash South Africa have been big beneficiaries of that. Yeah. And Gary mentioned a very important part of tertiary education, which is online. They've got one of the largest online, student numbers here in South Africa, which is very impressive for a business that's known for being bricks and mortar. So you talked about City Lodge just a moment ago, which is around, 50 or 58% occupancy levels. Yeah. We're talking about 99% occupancy in this business. So the operational leverage is at max. Yeah. So whatever dollar extra you're making from here goes straight to the profits. Line. Yeah. So we like this business a lot. It's also a Vestact recommended stock locally. Yeah.
Great. Gary, your no-moat
A vinyl company, also a Swiss company, but listed in London as well, is Glencore. So yeah, almost by definition, a commodity company doesn't have a moat because a commodity essentially is something that is undifferentiated. So you can't have a moat. And really what it comes down to is the ability to produce these commodities at the lowest cost. Glencore, obviously, one of the global diversifiers, if not the most diversified commodity counter. As I said, understand what this is going to do. Commodity counters are going to be more volatile, but they also supply, a non-correlated exposure in a portfolio. So something we believe that is worth having. It's very difficult to time, even in interest rate cycles, when commodities are going to perform. There's a very low correlation to, money's getting cheaper, now we must buy commodities. That's definitely not an argument for the stock. But I think the argument around it is that it is generally a top quartile in terms of costs, in cost efficiency at least, specifically across the likes of zinc. Nickel, I think, is second quartile. But really, a great portfolio of commodities. It's also obviously got the big marketing component, which is quite opaque for an outside investor to try and understand. But what it does is it's a network of all the physical distribution and logistics and partners where they go and sell all the different metals. They even market, iron ore, etc., on behalf of other commodity companies. Now, in a way, that marketing business actually gives a commodity counter like Glencore a semi-moat.
Right.
Which is so much more than you get with a BHP or a Rio Tinto, Vale, etc. So I think exciting, down 17% year to date. It's obviously under a lot of pressure, but obviously a very cyclical business as well. You can't really tell when this is going to perform, and I do think you need a longer term view. If you're hoping to get in at kind of the bottom of the range, and I think we are getting to the bottom of the technical range at the moment, but if you're hoping just to bounce up and get out, that's not kind of what the stock pick is. It's really a non-correlated stock to add to a portfolio longer term, and when commodities are running, you expect this to do exceptionally well. It's also compared to the other big diversifiers, but potentially it's limited its expansion when we had obviously the commodity price spikes after the Ukraine-Russia conflict started.
Yeah.
It didn't quite go out, and there was a couple of acquisitions, but not really the greenfields operations we saw with everything else. So it doesn't look like it's overinvested. I think a higher market intelligence around it as well. And currently on the London Stock Exchange, we're looking at about £3.70. Our target price is £5, also in good company with the rest of the banks there. So, quite comfortable that we've got a 30% discount at least.
Good. So the trading is a mini moat. So we'll take that. Chantal, your last one?
I'll just add a few words on capital appreciation from what Petri already said. So he talked about the payment terminals and the lay-by business. But in terms of those terminals, those things need software. That software is constantly upgraded and developed. And from that, this company actually earns a massive annuity income. And that allows for it to have a pretty decent earnings visibility. When the stock listed, I think in 2016, 2017, they had zero revenue. They listed as a special purpose acquisition vehicle. Now has over R1 billion worth of revenue and growing at around about 30% per annum. And we can actually see that continuing over the next 3 to 5 years as well. The stock is trading on a forward P of 7 times, but importantly, a forward dividend yield of 9.5%. So that is pretty interesting. So even if you have to wait a couple of years for the PE to re-rate, you should be getting a pretty decent dividend yield to tide you over during that time. The management team is extremely energized. They're very positive around the growth prospects of that business. They're very committed to those specific businesses, and they are also very excited about the opportunities that are available to them in the South African market. So those are 3 ticks in my box as well.
Great. So for our YouTube audience, we've got less than 5 minutes. So I'm going to fire some questions, and you guys can decide who wants to take them. Somebody's looking for a view on Discovery. Someone else is looking for a view on the banks. So we've seen the banks already rally since the election. Is there still more to go there? Somebody's looking for a view on potash. And somebody's looking for a view on just what are great tools to get started in the share investment space. And is there a role for like futures and options in a portfolio? So
I'll take Discovery.
Take Discovery.
Okay.
Go for it.
I'll take potash.
Potash.
I'll start
futures and options. All right, let's start with Chantal.
Banks.
Banks it is.
Okay. 1 minute each.
Yes, so Discovery is such an interesting stock at the moment. We've seen a bit of a recovery after a massive sell-off post the NHI bill being signed into law. But I think that there's going to be a lot of changes to what we've seen from the NHI as it's been put forward over the last few years. And it's quite speculative, but I can see a role for Discovery in administrating a lot of what's happening in the future of healthcare in South Africa. For now, with the status quo, I still think that the company has decent growth in South Africa. They're doing very exciting things offshore. The banking business is growing quite nicely. And because you still had that NHI-induced sell-off and it hasn't fully recovered, I think there is a little bit of scope for a recovery there.
Good. Gary, banks?
Banks. They're interesting stocks. The South African banks, I mean, they are interesting because they've had a hell of a run over the last little bit. And part of that is it's a great place for portfolio managers to almost park capital in a high interest rate environment. You get the endowment effects. As interest rates rise, their margins tend to increase. We now do feel like we're at the top of the interest rate cycle at the moment. But you get to a point where the endowment effect no longer works. And eventually, as interest rates keep rising, credit losses start to increase, and the banks, people essentially just don't have the money to repay, so it becomes a little bit scary. But right now, I mean, our banks are still very cheap compared to international peers. They have had a good run, but in earnings
especially
terms,
Capitec, my word, that's run.
Capitec is interesting because Capitec is almost different from all the other big five, or at least big four banks. So if you look at it, its ROE is far above. So I mean, you kind of almost mid-20s in terms of ROE, whereas the rest of the banks trade between kind of 15 and 18. They're all maybe 15 and 20, all trying to get to that 18 level. And it's obviously a very different business model that they follow. And mass appeal. A little bit more nervous around Capitec just because of the aggressive pricing in Capitec. I mean, our preferred bank has been first rank for a long time, but we added a second position in Standard Bank in the run-up in interest rates, and we've since exited that position. But overall, they're still cheap. I wouldn't be running to sell my banks anytime soon because they also offer a fantastic dividend yield.
Cool. 30 seconds. Potash.
I think I can do it in less than 30 seconds. So usually when someone asks you a question about potash, they've heard a pundit and they've bought potash, they've lost a lot of money, now they're trying to figure out what's going on. You should have taken that money to the casino. So no potash.
Okay.
I've been in the
Thumbs
industry
down for potash.
Exactly. I've been in the industry for close to 10 years now, and I've never seen that business being in favor.
Okay.
But people are always talking it up.
Good. Petri?
Okay, futures and options. I think in the South African context or the South African market, it is very difficult to make use of futures and options. Particularly because options contracts in our market are just massive and the retail investor can't really do it. It's more for institutional funds, that type of thing. In the US market, however, it is slightly different. There's a much lower barrier to entry into the options market there. It's much cheaper. What we like to do sometimes with managed portfolios is, for some clients, we'll do an option spread, for example, sell a put, buy a call. For other clients, what we do, rather than using futures and options to hedge, is use inverse leveraged ETFs. So, for example, SQQQ is an inverse NASDAQ ETF, which is wonderful if you time it right. Timing is important, trying to short things. Yeah. But if you can time it right and the market comes down, you can have a nice little hedge by using not as complex an option as an option.
Yeah. Good. Somebody asked, what are great resources? I'm going to punt our own YouTube channel. The JSE YouTube channel is great. Thank you, Petri. Thank you, Bright. Thank you, Gary. Thank you, Chantal. That has been SA Stock Picks at Leader X. Fantastic. Thank you for your time. Let's give them a round of applause. Thank you to